Alright, one more video about financial functions in Excel. This time what we're going to work on is an income statement and a depreciation schedule. And then we'll also be doing interpolating and extrapolating series of values. That sounds like a couple big words, and obviously you can see I get tongue-tied on them, and that's okay. I don't expect you to remember those two words, but what I do want you to know is how quick and easy it is to use Excel to get to the points of what we want. So I want you to go get two workbooks. One of them is called Investment. We've been working with that one in our last two videos. And just pull it up and open it up. And then the second one is called Income. And that's the one that we're going to work on initially here. Alright, so you'll see in the income we have three tabs. Our documentation tab, and you can see we're going to do some projections of our income statements for the next 5 years. And we have our income statement and we have a depreciation schedule. Okay? Nothing to get worried about, right? I know it sounds like a lot of accounting, but really let Excel do the work for you. Okay? And who said we were math challenged? Ha! Right? Alright, so let's go ahead and work on this. So here we go. So what we're going to do here is the first thing we need to do is we need to project our sales revenue. So we're going to say 1,800,000 is what we have for this year. But 5 years from now, I want to double it, right? So I want to have 3.6 million. So how do I get there? How do I get there and fill in what I want to have for those 2 years? Well, in Excel, this is cool because you can do a really complicated math formula and do it. But in Excel, let me show you how easy this is. Alright, we're going to grab our starting one and our ending and highlight that whole group. Alright, if you're on your Home tab, you come over here to Editing, and we've got this little button called Fill. Now you know when we've chosen to fill in other things, it just gives us colors. But here, we can do Series. And so we come down, we choose Series, and here's where the magic is. So what you have to know is your information in a row or a column? We're in a row. And what type is it? Is it a linear, a growth, or what? For us, for this example, we're doing a linear. That means that it's going to grow at the same rate every year. So we leave that linear. And then we simply say, let's go ahead and check the trend box too. So that gives us just another little option that we can do. And we say OK. And it automatically does the math for us to figure out how to get to these figures. Alright, let's try it again. Let's try and so let's get rid of those numbers. So let's grab them, delete them. What if we wanted to say we want to grow? Instead of saying I just want the same rate every year, I actually want to grow. So remember, we want to start at 1.8 million and we want to end at 3.6 million, right? So grab the whole group again. We're going to do the same thing. We're going to go up here to our Home, to our Fill, go down to the Series, and this time we want to say Growth. We want our Trend button checked, and we say OK. So you can see the differences of what that is and how that works. Alright. Up here in cell F3, in this scenario, the costs is 72%, so we can put 72% here. It's just a plug number, right? We know that everything that we sell has a cost associated with it. So in our case, it's 72. So now that lets us come down here to our cost of goods sold, and we can enter a formula here. And we simply say what? Equals, and we grab our sales revenue, and we multiply it by our percentage of cost of goods sold. Now, if I was just going to enter this one time in every cell that it belongs into, I would just simply do it like this. But because I like to be efficient, I'm going to make this an absolute cell reference, because then I can copy it to other places. So if I grab this here, and now I drag it across, I've just completed all of my cost of goods sold. If I come down here, I can say, what is my gross profit? Well, we know that the gross profit is equals, it's our sales revenue minus our cost of goods sold. So $500,000. So we can grab that and copy it across as well. So that gives us what our projected gross profit is for 5 years. All right. We're going to enter some expenses here. So you can just grab these numbers as I put them in here. So this one is 10,000, 14,000, 9,000, 10,000, 8,000, and 10,000. And so down here, our total general expenses, we can just use an auto sum. So come up here to auto sum. Make sure that you only get the expenses, that you don't get anything above it, right? Only those expenses that we had. All right. Now, check this out. If I grab all of these, right? These four. I don't want to grab my total, but I want to grab these 4 items. And just like we made the other stuff grow, how we wanted to do that, we know that our expenses are going to go up, 15% or 10% every year. So we could do this too. So grab this group. Let's go up to that fill button again and choose series. Now, don't get tricked. Right? We have a column of stuff that we want, right? Oh, but you know what I did? I kind of goofed that up. Let me grab, we have this much stuff here, but I actually need to select the whole section. So select B10 to F15. Hold down your control button to select that whole range. Sorry about that. Now let's go up and fill it. Grab our fill, say it's a series. Now it thinks that it wants to fill it in columns, but we actually want to do it in a row. So make sure you choose your row button. Okay? And then we want it to, it's going to be a growth because, expenses grow every time. And our step value is going to be 1.15. What do you think? We say, okay, what happens? We just did all of our expenses in one little spot. When you take accounting, how long does it take you to figure that out? All right, now, we made this auto sum here earlier. Let's go ahead and copy it across. And now we've got that done for us too. See how quick we can do this? This is an income statement, guys. We spend hours and hours in accounting classes messing with this. All right, now we're going to figure out the company's initial earnings, right? That's called the operating profit. So in cell B18, we're going to do something pretty easy here. We're going to say equals, and we're going to say gross profit, right, minus our general expenses. That's all it is. I don't know, what do you think? Was that a tough one? And we'll go ahead and copy that across because we're smart like that. Alright, that brings us to something we haven't calculated yet, which is our depreciation. So, let's go over to our depreciation worksheet for a few minutes. Alright, so we need to enter. Right, remember we borrowed that $300,000 to do some stuff with? And we have to enter it there. It's going to have a useful life of $100,000 at some point, and the useful life, and it's going to have a life of 15 years. Those will be things that are given to you: the cost, the salvage, and the life. All right, so we can calculate two different kinds of depreciation. I think, yeah, that's all we have on here. Straight line depreciation means that it's the same amount of depreciation every single year. So obviously that's an easy one to calculate, right? The declining balance means that we're going to have it's a percentage, right? So we have, it changes every year. It's not the same amount, okay? So it's a little bit different. All right, so the first one we're going to calculate is straight line depreciation. So it's going to be the same amount of depreciation every single year. So grab this cell right here, B10, and we're going to insert a function. So Shift F3. And the one that we're going to do is, if you can't remember what straight line depreciation is, type in straight line. So if you can't remember what the short one is, just type it in there, and it'll come up, and then you can click on them. See, nope, that's not what it is. Nope, that's not what. Ah, there we go. Straight line depreciation. Okay. All right. What's my cost? $300,000. Probably want to make that an absolute value, right? So I can copy my formula somewhere else. What's my salvage value? I have that. Absolute that. What is my life? Absolute that. Say okay. So it's $13,000 a year. So what do I want to do next? I can copy that formula to all 5 years, and it should stay the same. Alright, in B11, what do we want to do here? We want to say it equals B10 because it's the first year, right? We don't have anything that is accumulating there, right? And then, let's see, is that what I want to do? That looks kind of funny to me, but it's correct. Alright, so if I come over here to C11, what do you think that cumulative is going to be? It's going to be equals my current year, right, of depreciation plus whatever I had accumulated before. Does that make sense? Then I can take this cell and copy it across. It should go up. Alright, that looks good. Now I've got one more thing here. What's my depreciation here? So now my asset, how much is it worth? Well, let's see, it's equals. We started out at 300,000, right? Probably let's make that an absolute value so we can copy it. And we want to subtract our depreciation, our cumulative depreciation. So that means after year one, our $300,000 asset is now 286, and at the end of 5 years, it's 233,000. I don't know. What do you think? All right. So if we don't want to do straight line, another common way is called declining balance, in which we say it's a constant percentage a year. So maybe it's like 10% or 8% or whatever it is. It just gives you a different item. All right. So in our function, Shift F3, and we're going to say declining balance. And it is DB for declining balance. Alright, we have a little bit extra stuff here to put in, don't we? Alright, so where are we going to start? We're going to start with our cost. Let's make it an absolute value so we can copy it. And then our salvage value is what? It's our 100,000. Absolute it. Our life is 15 years. Whoops. Wrong one, 15. And then here is the period. So we're looking at the specific period that we're in. So this is our first year, so we would click on year 1. Now, I don't think that I want to absolute value that, right? Because if I copy it, it would always come back to year 1, and that would not be accurate. So in this case, that's all we want to do. And say OK. So you can see the difference between the two items there. It's quite a bit. So let's go ahead and we'll copy this little piece across. And you can see how it changes. It goes from 21,000 to 15,000 over the length of our time, doesn't it? All right, what shall we do? If we come up here and grab these two areas and say copy, we can come down here and paste it, and we save ourselves time. Now, it's the same thing. We could have done it manually as well. We could have said equals B14, and then we could have said do the math, but why not just do it easily all at once, right? Alright, so that gives us our depreciation that we have here, and so that gives us that. Alright, let's go back over to our income statement. So we need to figure out our depreciation expense, right? So click on B19, put an equal sign in there, and then I want you to go back over to our depreciation tab, and we're going to use the declining balance. So we're going to use B14. And then hit your enter key. So if you look at the formula in there, you'll see it's depreciation B14. So that's very, very an easy way to do that. All right. So what happens if I copy this and bring it over? That should match, right? We just copied and pasted it over to there. Now I can come down here to B20 and I can calculate my operating profit. So that becomes very simple again. It's equals what? My earnings before taxes minus my depreciation, 421,000. And again, because I'm a smart cookie, I'm going to copy it across, and we now look like this. Alright, now we need to finish the rest of this. We're almost done. Check this out, 2 more lines. We can get there. Okay, so now we need to know how much interest we're paying on that loan, right? So click on our interest expense and say equals. This is where we need that investment sheet. So click on your other spreadsheet to the investment spreadsheet, go to the loan schedule side, and find cell down here, B36. You knew there was a reason we calculated this in a different video, right? And that's our interest. And enter. And then we can copy this across as well. That doesn't copy so well that way though, does it? Because we don't pay $23,000 a year, do we? No, it should be something different. So why? You see this up here? How it did the B36, it made it an absolute value. We don't want B36 to be an absolute value, so hit your F4 key until it just says B36. And then enter. Now let's see what happens when I copy it. There we have the right numbers. So you have to pay attention to what's in your formula bar when you're looking at it. Okay? Alright. Now we're going to go down to row 23 and we're going to do our next calculation. So we're going to do earnings before taxes. So equals our operating profit. Oh, you know what? Let's back up a second. Let's get rid of here. You see how we have negative numbers in this row? Let's get rid of that negative by coming up here and saying in between that equals and that beginning, put a minus sign in there. And that'll make that a positive number. And then recopy that across. There we go. So that way we're looking at consistently positive numbers or negative numbers. Alright, now our earnings per taxes equals our operating profit minus our interest expense. There we have it. I mean, you could have done it and just, added them together. That would have worked just as fine. But, either way. Okay, scroll back up here to the top because we have to figure out what our taxes are. And we're going to have an assumed tax rate of 33%. Kind of the corporate rate, right? So, what are we going to do down here? In B25, we have to calculate that, so we say equals what? Earnings before taxes times our assumed tax rate. And if I want to copy it, I need to make that an absolute cell reference. And then I can copy that across. Whew, that's a lot of taxes, isn't it? And down here in B26, what's our net income at the end of the day? It's equals our earnings before taxes minus our taxes, and not a whole lot of money. Whoops. And we can copy that across as well. So you just completed an income statement. Very quickly, very easily. I hope that this will be helpful probably to you in the future as you go along. Alright, I'll see you in the next video.